Okay, I believe we are live. Well, good evening, everybody. It is August 23rd, 2022. It is a Tuesday, and it is roughly about 8:45 p.m. Eastern Time here in Miami. Now, on tonight's stream, what I wanted to talk about is a particular cybersecurity company that has caught my eye for quite some time. So that particular company is called Palo Alto Networks, under the ticker symbol PANW. So they did report Q4 earnings on Monday. Came out with an absolutely fantastic quarter. We are going to be breaking down this quarterly earnings report in a multifaceted way. So the first way on the channel, we always like to think about things from an investing standpoint. What are the characteristics of a winning stock? Is it the earnings growth? Is it the revenue growth? Is it the return on equity? Is it the expansion in the total addressable market? So we're going to cover the earnings report from a financial standpoint, but I also want to talk about the cybersecurity industry in general. Okay, so oftentimes on this channel, on Walks to Wall Street, we will not only analyze companies from an investment standpoint, but also from a career standpoint. You know, maybe you are just recently graduating college. Maybe many of you have kids that are entering college. You're not too sure what they want to major in. They're not sure what they want to do. So maybe cybersecurity is a pretty good route in terms of a career to pursue. Maybe you want to be an engineer. Maybe you want to be a salesperson, a systems architect. So we're going to break that down tonight on the stream. But just in general, everybody, so Q4 profit did rise about 49% to $2.39 a share, as revenue also beat analysts' expectations, rising about 27% to $1.6 billion. This is in comparison to $1.2 billion in Q4 2021. Another thing to note about this earnings report is they did approve a 3-for-1 stock split. So we are also going to be talking about that tonight on the stream. What does it mean? Is it important? Should we be paying attention to it? And the like. So let me just close the laptop here. Then we will say hello to everybody in the chat. But it is a beautiful night out here in Miami. It was a very, very crazy day today. Very hot, very humid, but beautiful day nonetheless. Give me a second and let's see who we have in the chat. Hope you all are well. Hey, Paul Tricky is here. Good to see you, Paul. Welcome. I see Chris Beeman. Hey, Chris. Good to see you. Welcome, welcome. I see Sabrina Fair. Good to see you, Sabrina Fair. Welcome. Brian is here. Says, hey, Tom. Raphael says, hello. Sally says, hi. We have Otto. Good to see you, Otto. RJ says, Olaf from Colorado. Good to see RJ. Hopefully everybody had a good start to the week. I do apologize there was no live stream yesterday. I was just extremely busy. I actually needed to build a presentation or a deck for today, which went pretty well. I had a pretty big presentation in front of a home healthcare association, so I definitely needed to be sharp and alert for that. Maybe on an additional stream we will sort of talk about what I was presenting. But I actually think a lot of the topics on tonight's stream, obviously we are going to be talking about cybersecurity, more specifically Palo Alto's earnings report, which did shatter analysts' expectations, beating both on the top and the bottom line. But I think in addition to that, this was what was called a beat and raise quarter. So oftentimes on the stream, we'll talk about what are the stocks that you want to look to buy, right? What are the particular companies? What are the different, I guess I would say characteristics. And one of the main characteristics that I always look for in a particular company that I may make an investment in is how many quarters are they not only beating analysts' expectations. So let's say, for example, the consensus on Wall Street is for company XYZ to post $1 billion in revenue and about $2.50 of EPS. If a company then reports about $3 in EPS on $1.5 billion, that would be an earnings beat on both the top and the bottom line. But what's even more important is if they raise expectations for forward guidance going down the line. And that's exactly what we got from Palo Alto Networks. Yet again, they did also have a beat and raise quarter last earnings report. So if you want to look back about 3 months on the stream, we did do a full earnings breakdown for Palo Alto Networks. But a lot of the conversations that I was actually having today with a lot of C-level executives, director-level executives at a lot of home healthcare agencies across the East Coast, the number one concern for their business, second only to employee retention, was cybersecurity, right? They have to be in compliance with HIPAA laws, especially if you have thousands of home health aides out and about in the field handling proprietary patient information. How are we ensuring that patient information and proprietary data is safe? Maybe a home health aide is connecting to an unsecured internet access at a patient's home that could potentially be compromised. So how do we lock those devices down with a particular MDM or cybersecurity endpoint management solution to sort of absolve all of those issues? But we'll talk about that later. Hey, Grant Stetton is here. What's up, Grant? Welcome. Always good to see you. Western Mass Dave, the one and only. Dave, how's it going? Everybody had a start to the week. I appreciate that, Ryan. It's been a very busy start, to say the least. I see Vinny Castellanos says, good evening, Tom. Welcome, Vinny. Gene says, I hit the like button for this stream. Appreciate that, Gene. Thank you so much. Wendy England says, hey, I'm here, just not chatting. I have a lot to do, a lot of chores to do around the house. Well, good luck on all your chores, Wendy. Appreciate it. Mauricio says, what's up, y'all? Good to see you, Mauricio. Welcome, welcome. So tonight we are going to be walking past the FTX Arena. Now, I think there may be an event going on at the FTX Arena. Now, I know it's not basketball season, so it's probably a concert of some sort, so we'll check that out. There may be a lot of people. Gregory is here, says good night. Good to see you, Gregory. So this is the very famous 1000 Museum building. Oftentimes we take a look at it from across the street, but tonight we are standing on the corner of Northeast 2nd Avenue. I'll show you guys the outside of the building. Hey, Abdullah is here. Welcome, Abdullah. Says hello, Tom. Sandra Nunez, welcome. Tiago, young Lucas is what's going on from Florida. Not too much. It's a pretty nice night. Humidity broke. It was crazy, crazy hot today. Very, very hot and humid, but during the nighttime it is quite beautiful. It's one of my favorite buildings in the city, 1000 Museum. Hey, XOXX Bob is here. Welcome, Bob. So before we do a quick dive into the actual earnings report, I do want to just give a quick preface about something else, because I think over the next 2 years, a lot of the growth, let's say economic growth, that could potentially generate a lot of alpha in our portfolios are probably going to come out of two main sectors of the economy. And this is up for debate, but if you had to ask me, if you said, okay, if you had to put all of your money, right, this is just talking for fun here, if I had to put all of my money into two specific industry segments for the next 10 years, where would I put it? So for me personally, it would be number one in cybersecurity, and number two, it would be healthcare. Okay, I think what we have come to now, so anytime I think about a traditional product or a service, I think about a product or service in two distinct ways. So number one, I always think about a product as a nice to have. So it could be a product that's, you can use it if you want, but if it's a recessionary environment, you're probably going to cut that out first. So that's a nice to have. And then number two, as a must have, right? Some products and some solutions you need. It's a must have. I actually think cybersecurity is evolving into what I call the third paradigm, which is very exclusive to me, something I just made up. And that third phase, I would call it a requirement. So I have three buckets for products and services. Number one, to review, is a nice to have. Number two is a must have. And number three, I think cybersecurity is now breaking in its own segment, which is a requirement or a prerequisite for anything. Because if we look at the data, if we talk to all of the leading cybersecurity analysts, CEOs, and report after report that comes out, I think PwC, so PricewaterhouseCoopers, actually just put on a survey and sent it out to many C-level executives across the United States. And the number one concern that C-level executives have is cybersecurity concerns. So I think let's say if you're a brand new chief technology officer at a particular organization, if you don't have at least 10% of your IT budget dedicated to spending on cybersecurity, I think you're probably not going to be a CTO for much longer. And that's actually unfortunate, right? I think we're going to see persistent threats and attacks, not only from hacker groups domestically, but from international groups and nation states as well. So that's the reality. So I think as we shift our focus from, I'll give you a quick view of the FTX arena here. I think as we shift our focus from analyzing Palo Alto's earnings from a financial standpoint, yes, it may be a good company to invest into, but if you have kids, maybe they're graduating college, or maybe they're just entering college, or maybe you're looking for a career change, right? Maybe you're watching this stream, you just graduated college, or you're looking for a career change. I think cybersecurity, specifically if you enter an engineering role or a sales role that directly impacts revenue, I think you're going to have unbelievable job stability. And here's one of the reasons why I say that. So I wanted to program the Nightbot today to provide everybody with the most recent slide deck from Palo Alto's Q4 earnings. So if you type !cyber, CYBER in the chat, once again, that is !cyber in the chat. This is the original slide deck that they reviewed on Monday during the quarterly earnings report. It gives some forward-looking statements. It runs through the financials. But I think if you flip to slide, we'll cross the street here in a second. I believe if you flip to slide 3, there's something on that particular slide that caught my eye. And it was a statement from the CEO of Palo Alto Networks, Nikesh Arora. And he said the number one thing that we're facing as an industry and as a company here at Palo Alto Networks that could potentially provide us an even more of a tailwind here is a shortage in cybersecurity talent. So as we've been talking about on the streams, almost to the point of ad nauseum, we've been paying really close attention to the unemployment rate, which is at all-time record lows. That is true. About 2 weeks ago, we just got a record jobs number, almost about 500,000 jobs, a little bit more than 500,000 jobs were added. But there's a caveat to that. If you look at the labor force participation rate, it actually declined as the jobs numbers, or let's just say added payrolls, are getting stronger. So if I'm the CEO of Palo Alto Networks, if I'm Nikesh Arora, I'm going to take these things into consideration. I'm going to say, if you think about their revenue growth, and we'll get into that in a minute, but just for some perspective here, if we think about cybersecurity as a whole and the total addressable market, here's an interesting statistic. Palo Alto Networks is growing their revenue roughly 2 times the pace of the growth of the cybersecurity market. Okay, so if you think about that as from a CEO, if you're growing your revenues nearly 2 times as fast as the growth of the entire cybersecurity market, so let's say if the total addressable market, or the TAM of Palo Alto, is growing at 14% year over year, Palo Alto Networks is roughly growing their revenues at like 29 to 30% year over year, you're going to need critical employees and infrastructure to support that revenue growth, and we just don't have it. So I believe it was on slide number 3. Again, CEO of Palo Alto Networks, Nikesh Arora, came on the earnings call and said that there is a critical shortage of cybersecurity talent. So for all of those who are watching out there, you know, maybe you on the weekends could study up on cybersecurity. Go to the library, take some free classes, and there's definitely demand for cybersecurity jobs in an environment where all we hear is that companies are cutting headcount, right? So as the theme of the stream, there's always a bull market somewhere, you just need to know where to look. Well, if you're looking for a job, I would apply to all the cybersecurity companies. So that's the tip for the night. Hey, the LT prods, as they look well positioned to become the Amazon of cybersecurity. Yeah, and it's really interesting how Palo Alto has adapted and changed over just the last, 5 years. I think Palo Alto Networks went public about 10 years ago, didn't they? Hey, Carol H is here. Says, good evening, Tom and friends. Welcome, Carol. Good to see you. Jeff is here. Says, I'm in network engineering and definitely agree. Everybody needs security engineers. Hey, Jeff, that's awesome. So, Jeff, a lot of the times on the channel, I like to sort of split it up, right? Because I think it's important to talk about the financials, but a lot of people send me emails, they want to get into investment banking, they want to get into tech sales, and there's a whole different world out there as it relates to tech. You could be a solutions architect, a systems architect, a product manager. So in your position, Jeff, do you see the requirement for, let's say if you're a hungry person, maybe you're in college, just coming out of college, is there a requirement now that if you don't have a college degree, none of these companies will even look at you? Or are you seeing that there is a potential for, if you just go to a cybersecurity boot camp, like an 8-week boot camp at one of these universities, do you think there are job opportunities for these particular folks in the engineering space at a cybersecurity company? Because that's what I'm seeing. But as an engineer yourself, I would like to see your perspective on that. Because I think there's a lot of opportunity, and unfortunately, people will often write themselves off. I don't have the 4-year degree, I only have an associate's degree. or I have a 4-year degree in English, that means I can't work in tech. And from my experience, that's not true. I majored in criminal justice, and now I'm selling enterprise tech. So it definitely, you don't really need to just major in computer science to get these lucrative roles, especially now that they're in high demand. Oftentimes, I think from Palo Alto's earnings, again on page 3, if you type !cyber, I think they increased their R&D spend in employee training. So that means they can't find people with cybersecurity experience, so they're actually investing more dollars into training not only their existing workforce, but just fresh new recruits too. Jeff says, nope, I've been involved in hiring process and we don't really find college degrees help candidates much. So take it from Jeff. I mean, I've been pounding the table for this for years, right? For years. Now, I do want to make a quick clarification because I think this statement can go a little bit off the rails. So here's my clarifying statement. I think college is extremely important. Extremely. Okay, that's the clarifying statement. But it's not the end-all be-all. If you throw your entire mind, body, and soul to learning and researching about a particular subject, and you maybe start your own newsletter about it, or maybe you try to build your own SaaS product and teach yourself, the basics of programming or network architecture or network infrastructure, right? Companies are going to give you a shot. It's all about the knowledge you have in the industry, not so much the piece of paper. And I think a lot of companies, if you can get on an interview and really telegraph that and showcase that you're willing to learn, they'll give you a shot. They'll give you a shot. So, Borat says college makes the process easier. Yes, college makes the process extremely easier. Jeff says, agree, Tom, college is a plus, but some of our best candidates and engineers either didn't go to college or went for a completely different degree and went into something new. I agree 1,000%, 1,000%. And there's actually a lot of these boot camps out there, everybody, are actually pretty good. A lot of these cybersecurity boot camps, cybersecurity certificates that you could take. I know that LinkedIn has a pretty good one. Not for nothing, Paul. Not for nothing. I actually think that Palo Alto Network actually has some free certificate programs. And I would take all of them. I would just be an absolute consumer of this space because I think we are in inning 1 in terms of companies, not only in the United States, but globally, spending on cybersecurity. Hey, Frank is here. Says, good evening from upstate New York. What's up, Frank? Mike C says you need to be a Tom level brain to make it without a degree in tech. I am not that smart. Trust me. I am not. I am really not smart at all. It's just when I almost get to the point of overdoing it on reading and investigating into a particular subject. I'm not that smart of a guy. Trust me. Check it out is here. Says there are exceptions in IT, but in the business field you have to have a degree. Well, so that's a good point. Let's clarify that really quick. If you want to be a CEO of a company, let's say if your goal is to be CEO of Goldman Sachs, or you want to be the CEO of a publicly traded company, yes, then you probably should shoot to go to Wharton, get your MBA, and do all that stuff. But if you want to have, we'll wait till this car passes. If you just want to get a regular job, maybe as an entry-level account executive or an entry-level solutions engineer, you'd be surprised at how fast you could climb the ladder. But if you want to obviously be a CEO of a publicly traded company or something like that, then yeah, you should probably go get your MBA and all that stuff. I agree 100%. Hey, Billy says, how about the new home sales data down 12%? So Billy, I was so crazy busy today, I didn't even have time to look at that data, but we'll go into that in a bit. So everybody, let's just jump into this. Let's go into some of the financials, okay? So Palo Alto Networks, tongue twister for myself there. Q4 profit did rise about 49% to $2.39 a share, while revenue also rose about 27% to $1.6 billion versus about $1.2 billion in Q4 of 2021. Now, the board of directors did approve a 3-for-1 stock split. A 3-for-1 stock split. But you guys know how I feel about stock splits in particular. You should never use a stock split alone as a catalyst to initiate any sort of trading activity. Okay, stock splits do not do anything to change the underlying fundamental value of a company. So all of the fundamentals are the same. So let's say if you own about, $1,000 worth of Palo Alto Networks, after they do the 3-for-1 stock split, you will still own $1,000 worth of Palo Alto Networks. You'll just have more overall shares in your brokerage account at a lower price. Okay, and there's many reasons why a company will do this. In Palo Alto Networks case, I really think that they're just doing this to allow investors access at a little bit of a cheaper price. Now, I use the word cheaper loosely because a $5,000 stock can be the same amount of value as a $2 or $3 stock in terms of market capitalization, right? But it's just the overall price of that particular security, if that makes sense. If that doesn't make sense, we could go into that a little bit more. Yeah, so Mike C, I believe, is like stock splits are mostly psychological. So I believe Google or Alphabet did a stock split mainly because they want access to be in the Dow 30. But we'll talk about that maybe on another stream. Great is here. This is after the Fed announcement Friday. We will have a beautiful market crash. Let me ask you about that for a minute. So what do you think is going to happen? What do you think the Fed is going to say? So on Friday is when we have Fed Chair Jerome Powell giving his speech at Jackson Hole. We actually may live stream that, by the way. That is not confirmed, but we may live stream that. But here, let me give you some golden nuggets into the earnings report. So once again, if you type !cyber, CYBER, I programmed the Nightbot to actually give you guys the actual investor deck to Palo Alto's earnings. So for me personally, here's what I would look for, and this is what I always look for in a particular earnings report of an enterprise software company. And I think you guys could already predict this because I've been hammering you guys about this over the last 7 months. And that is large deal flow, so deal flow in the enterprise space. And for lack of a better terminology, Palo Alto Networks absolutely blew the freaking doors off of their deal closure in the enterprise space. Deal activity was insane. This is why I oftentimes say, look, if you're looking to get into tech sales, it's very critical you be on these earnings calls, because if you want to be in enterprise sales where you're selling large software deals into the Fortune 500, Fortune 50, and the like, also if you talk about like Global 2000 customers, you want to make sure deal flow activity is very healthy in that particular department. And that's exactly what we saw from Palo Alto. So deal activity in Q4 was extremely strong in the large deals, continuing to surge with more than 1,250 customers spending over $1 million of ARR. So ARR is an industry term for annual reoccurring revenue. So ARR is an acronym that stands for annual reoccurring revenue. MRR would be monthly reoccurring revenue. Now, you always want to compare this to previous quarters the year before. Okay, so as of right now, Palo Alto Networks likes to call them the millionaire customers. So individual customers, organizations that spend about $1 million a year with the company, is up from about 986 customers last year. So pretty strong growth there. Now, if we think about the particular products and services Palo Alto Networks sells, I think I'll have to do a completely different stream on that because I could talk about that for hours. We only have about an hour and a half tonight. But For argument's sake, let's just put it at 3 key industry segments, right? They have 3 main product sets. So as we talk about large enterprise accounts, if we think about globally now, the global 2,000 customers who've purchased products in all 3 of Palo Alto Networks platforms is now 50%. So 50% of their global 2,000 customers are in all 3 of their product sets. And this is something that's called landing and expanding. So is anybody familiar with that terminology, landing and expanding? If not, I'll quickly explain it for those of you who may want to get into sales or tech sales in general. Oftentimes what you'll have are account acquisition reps, which could be anything from an account executive, an enterprise account executive, or a major account executive. And the job of the account executive is more of a hunter role. So the industry terminology is called a hunter role, where your job is to prospect for new business. So once you close that business and lock in those deals, 9 times out of 10, that customer then transitions over to account management. Okay, so there's usually a slight nuance between account executives and account managers. Account managers are responsible for nurturing that existing relationship. So let's say if you close a particular customer on a Palo Alto Networks firewall, something like that, just to make an example, the job of the account manager is to expand that customer's business. So let's say if the account executive closed a deal worth $50,000 ARR, which is annual recurring revenue, the job of the account manager would be to sell into that existing account and hopefully to grow the value of that customer, right? Maybe to 100,000, maybe to 200,000. And when you get into the SaaS business or software as a service business, which Palo Alto is slowly transitioning to away from their traditional hardware business, that revenue becomes very, very predictable. And Wall Street loves predictability and cash flows, loves predictable revenues, because once you have predictable revenues, there's really only one thing that you need to model, and that is the churn rate. So are your customers happy? Are your customers canceling their orders? And if you have a very, very low churn rate in the industry, well, you're going to be feeling well, because that can pretty much grow your business exponentially. Hey, Sunshine After Rain is here. Welcome. Good to see you. Sunshine After Rain, hopefully you are well. The LT Prod says, I thought Palo Alto would have had a larger gain today. So the stock was up about 11%. And here's, I guess we'll sort of transition into what I look for in terms of a relative strength perspective. Now, I do want to set the precedent that when I talk about these particular companies that are blowing out their earnings, beating and raising on forward guidance, I'm not telling you guys to buy these particular companies. I think the purpose and the goal of the stream is to have a dialogue and a conversation to develop good investing habits so we can identify those particular characteristics within a company's earnings report that really, really drive returns in the stock. So you want to look for a company that is growing their revenues at least 25% quarter over quarter. This is Miami Tower, by the way. You want to look for a particular company that is growing their EPS or earnings per share roughly about the same amount, 25% quarter over quarter, maintaining very strong and healthy pre-tax and after-tax margins in an expanding total addressable market. So I think I hammer home that point more than anything. You want to look to invest in a company that is selling into a market that is not in structural decline, okay? You don't want to be selling horse and buggies when you have Tesla coming out of the woodwork, right? You want to be selling an industry-leading product that's in a market that has a total addressable market that is not only huge, but that is growing. So if we think about the TAM for Palo Alto Networks, one of the things that Nikesh Arora said on the earnings call is that Palo Alto Networks has massive untapped potential because Palo Alto is growing their revenues at 2x the pace of the TAM. So think about that for a second. If we think that the TAM is growing at about 14% CAGR, and CAGR stands for compounded annualized growth rate, the company's revenue growth rate is 29%. right? So that is like the magic elixir for a stock that should be going higher. Now, obviously the overall trend in this particular stock market, if you look at the indices, is clearly down, right? We are clearly in a downtrend, but when the market does turn, you want to look for those companies that are showing relative strength. So as the market and the major indices and 9 out of 10 stocks on the exchange are moving lower, you want to be able to identify the particular companies that are bucking that trend and actually showing relative strength and headed higher. And Palo Alto Networks is definitely one of those particular companies. So we'll keep that on our radar. This is the beautiful 200 Southeast Financial Center here in downtown Miami. One of my favorite things about this building is this massive American flag right outside. Hey, Shadow Ship is here. So hello everybody. Good to see you, Shadow Ship. Happy Tuesday to you. John is here. Lena Sandoval says hello, Tom. Good to see you. The LT prods, that might mean Palo Alto may have more room to run. So I think that if I had to choose two industry sectors specifically, to say if I had to pick only two sectors in the market that I think would show outperformance over the next 10 years, I would definitely place my bet on cybersecurity and healthcare. Cybersecurity and healthcare. And I'll give you a little bit of a backstory why I would say that. Now again, I could be wrong, right? But this is just my personal opinion. But it's my opinion for a couple of reasons, which we'll go into right now. I just want to show you guys one last view of the Southeast Financial Center as we continue on our walk. But the first reason why I think cybersecurity in general will outperform is obviously, number one, anytime there's a particular survey, right? A lot of the times Deloitte, KPMG, EY, PwC, PricewaterhouseCoopers will put out these particular surveys to C-level executives, and always their number one concern is cybersecurity threats and attacks. So if we think about overall spending in the cybersecurity space, it's bound to be on a one-way trajectory, which is higher. Now, the funny thing is, a lot of companies may not want to spend money on cybersecurity, but it doesn't matter. It's almost like they have to, okay? If we think about what I said at the very, very beginning of this stream, I always classify particular products and services into two distinct categories, okay? Number one is a nice-to-have product or a service. Number two is a must-have product or a service. But I think that cybersecurity is crafting out a third particular sector or a segment that I just made up here, which is called a requirement. And we're already starting to see this from the federal level as well, okay? I think there's going to be entire insurance industries built around cybersecurity. I think if you run your business as a part of a critical infrastructure, let's say if you're in healthcare or something like that, I believe that down the line, governments will make sure that you have cybersecurity insurance. So if there's a big hack or ransomware attack, that your business doesn't go under. I think this is going to get that crazy where if you're a big hospital, let's say if you're a big insurance payer provider, maybe you're a big oil and gas pipeline company, I think you're going to be required pretty soon to have cybersecurity insurance. And if you don't, you have to maintain a budget spend on cybersecurity products and services because things are going to get pretty bad. And I'm not saying that to scare anybody, but if you listen to any cybersecurity interview from any of the C-level executives or CEOs of these companies, there was a really, really good interview with the CEO of Palo Alto Networks, CrowdStrike, and Zscaler, and they're all telling you the same thing. There's going to be more attacks going forward, not less, and they're not only going to come from here in the United States or domestically, they're going to come from international operators and even nation states that are going to launch these advanced cybersecurity attacks. So that's where one of the things I always talk about on the streams is follow the money, right? If more spending and more infrastructure is going to go into cybersecurity, that's one of the sectors I want to be in. And obviously in the United States, We probably spend more money as a percentage of GDP on healthcare than any other country in the world, so that is a sector I want to be long as well. Anybody have any feedback on that? Agreements, disagreements? I would love to have you know. Nako says, you think so, Tom? Cybersecurity insurance for individuals? I think there will be cybersecurity insurance offered for individuals, but I think what may happen down the line, and I'll give you guys a little bit of a backstory. I can't go too deep and wide into this, but a lot of my clients that I deal with are in healthcare. Okay, mostly from the home healthcare side. So very, very large, some even publicly traded home healthcare organizations that operate home healthcare agencies, nursing homes, assisted living facilities, and also hospitals I work with as well. And oftentimes when I'm talking to IT departments or a CEO of a major hospital, cybersecurity is always on the forefront. Always, always on the forefront, because if we think about the regulatory environment of healthcare, it's pretty strict. It's pretty strict, especially with all the different HIPAA laws, compliance. And home healthcare is what I call a contact sport, right? I always make this joke with one of my good friends. She's a director of patient services at a very, very large home healthcare organization. And she would always tell me, she's like, Tom, home healthcare is a contact sport. Our aides, they have about 6,000 home health aides across the United States. They actually have to go on premise and administer care to the patient. And the problem is, any cybersecurity executive that you talk to, the number one part of vulnerabilities in a corporate infrastructure is the endpoints. So anytime you have multiple endpoints, and an endpoint could mean maybe it's a laptop, maybe it is a smartphone or a tablet. The more endpoints, the more, I would say, the more likely it is for you to get hacked or attacked, right? The more point of entries, the more point of vulnerabilities, the more points that a particular infrastructure could fail or be exposed to an Emotet attack, a ransomware attack, or something like that. So many companies out there provide specific products to secure that, right? An endpoint management software, a zero trust technology software, things like that. So I think that's something that we should all be cognizant of. Jeff is here, says, hey Tom, I agree about this. Most organizations also need to do a better job about disclosing cyber attacks and breaches. Yeah, so Jeff, you're right. And I think a lot of the times they're just scared, right? They just don't know what to do. Because if we think about the demographic of, and again, I'm just gonna be as professional as possible, but I think we need to come to terms and live in reality here. A lot of businesses, especially, let's say in the mid-size sector here in the United States, the owner and operators tend to be a little bit older, right? Maybe they're not as tech savvy. They don't understand all of this stuff. So if you're trying to tell, a home healthcare owner that it's been in the family for 3 generations about cybersecurity and attacks and endpoint threats, they're gonna look at you like, what are you talking about, right? And it's going to intimidate them. So they're a lot less likely to expose those vulnerabilities, talk about them. So I agree 100%. Oh, check out this plane taking off here. Hey, Dusty Cole, good to see you, welcome. Jeff says employees are usually the weakest point and where attackers will start to try to gain access. Yeah, so one of the biggest issues that I've been seeing is from an Emotet perspective. So Emotet are like phishing emails. I'm sure, so let's take a poll. Has anybody got those Emotet phishing emails? Some of them are so good, these phishing emails, where it can look like you're getting an email from your boss or from a customer, and they're actually just phishing scams, right? So if you click on a link, so I actually just got one the other day that was disguised as a particular company that I work with, and it says, hey, I didn't get the invoice, click to see you invoiced me the wrong amount. And obviously I knew it wasn't from my customer because the domain name was completely different, but they do a very good job of making these emails look pretty real. And what happens is if you click on that particular PDF file, it downloads either ransomware or malicious software onto your computer, and that could open your infrastructure up for extortion, being completely shut down. So I think phishing emails is going to be the #1 area of vulnerability. I think I may need to cross the street here. I think this may be closed off. Let's do that. Wow, it looks like we have some major flooding here. Check it out, says Tom. Phishing phone texts. I got a message from a DC number claiming they were the IRS. Wow. You know what? I get those text messages too sometimes. But for some reason, I think the text messages are more obvious scams than emails. Because I think pretty much everybody knows who's texting them, right? So anytime you engage in a text message with someone, you probably know that their phone number by heart or something like that. So if it's a number that you really don't recognize, I think most people can decipher that it's a scam. Willie says 7 years ago doctors would surf the internet. Ryan Royal says I always look at the website / domain name before looking at an email. That's a pretty good policy. Let me just cross the street here. You know what, maybe it's some sort of a water main break or something from the construction here. Nako says, Tom, saw an email attempt from my boss. Email looked legit, but email address changed when you hit reply. So this is what I've been getting a lot. And maybe you guys could provide some insight on this. A lot of emails that look like they're from my customers in terms of the signature, right? So the signature will look totally legit. But let's say if you were on your mobile app, your mobile phone, looking at it on Outlook, you're busy. I could totally see how somebody couldn't, figure out at first glance that it's coming from a Gmail account and then click the PDF attachment or something like that on the email. I could totally see how things like that happen. And again, it only takes one person, right? It only takes one person at an organization to click a link that they're not supposed to, and boom, you're toast. Hey, Joan is here, welcome. Hey, G Shep, what's up? Good to see you, G Shep. Welcome, my friend. Says, hey, Tom, I get these emails all the time. Do not respond to any of them, is what I learned. I think that's a pretty good policy. Hey, Derek. Awesome, Derek. Welcome to Miami, man. Horatio Snipes is here. The Mighty Bull is here. Welcome, Mighty Bull. Austin City Limits is Tom. Have you received phone calls regarding car insurance scams? I do, and I receive a ridiculous amount of phone scams about my internet bill, especially ever since I moved to Miami. Like a ton of scams about my internet bill. All right, let me see if I missed any comments here, my friends. Hey, Style says, I'm in Miami. Good to see you, Style. Welcome. Nakos says, nailed it, Tom. This is a huge issue for the age factor. Also, people's eyes glaze over as soon as you start talking about IT. Sweet Country living in Michigan says, loving the chat tonight, Tom, and thank you for the info. No problem. Thank you for being here. So once again, everybody, if you want to read the investor deck for yourself, if you type !cyber, C-Y-B-E-R in the chat, it will drop the link to the Palo Alto Network's earnings report presentation, which I think is very important for you guys to read. So if you scroll down to page 3 on the deck, this is something else that I found very, very interesting here. So again, going back to the standpoint from investment and maybe a career path if you want to be in enterprise sales, usually a particular company will highlight their most recent wins that are very, very big deals. So there were 3 particular deals that stood out to me in Q4 from Palo Alto Networks. One of the deals was a $75 million deal with a global IT company. The second deal that stood out to me was about a $40 million deal with a financial services company. And then last but not least, a $75 million deal with a professional services company. So the reason why I bring this up is because when you have customers that are willing to spend that much money with your particular organization, that essentially builds instant credibility. Okay, and if you're trying to dominate and you're trying to win market share, one of the things many salespeople will do is easily name drop a particular customer that they work with to build credibility. I do this sometimes as well. That makes it a little bit more relatable to your customer. Let me press this, I think. I always consider Miami, Florida, like the Long Island, New York red lights. Maybe about 20 or 30 minute red lights. But oftentimes if you're trying to sell, let's say you're trying to sell a big electrical contractor, a particular piece of software, it helps to build a little bit of credibility and put the customer at ease if you have a particular customer already that looks like them. So you could say, hey, we're working with this particular contractor doing XYZ. They have a very similar business model to you. And even times those particular customers will provide referrals or give you a good word or something like that. So I think that's another particular line item to definitely be cognizant of in any earnings report that you're scrutinizing, is you want to make sure the deal flow in the enterprise space is very healthy. Now, I will be sort of talking out of both sides of my mouth here, because here is something that you need to worry about in a particular earnings report, okay? And this has to do with the diversity of the revenue stream. So when we're talking about diversity and revenue stream, what do I mean by that? Well, I'll tell you what I mean by that. If you have an organization where 50% of their revenue comes from 5 particular customers, even if they're doing a ton of business in revenue and they're very, very profitable, I may want to think twice about investing in that particular company. And the reason for that is because they're too revenue dependent on too few customers. That means if 1 or 2 customers churn, the competition steals those customers away from you, well, there goes about 25% of the business, right? So in Palo Alto's case, from looking through the earnings report, this is a very, very promising statistic here. About only 5% or 5 to 8% of their overall billings or revenue comes from the large enterprise customers, right? So when we're throwing out a lot of these names that they have about 1,290 customers that bill in excess of $1 million, that only accounts for a very, very, very small portion of the revenue, which means that they have a very wide, large, and diversified clientele base, which is exactly what we want to be looking for. So please be cognizant of that as well. Hey, Roy is here. What's up, Roy? Good to see you. Ibrahim Azam. Welcome, Ibrahim. A lot of Teslas out tonight. I think this is like the 7th Tesla that I've counted here. Yeah, Wendy, England's like absolutely need diversification. Agreed. Cora Carpenter is here. Welcome. Eric Tate says, hello, Tom. New here. The automobile industry is starting to have a pushback because people feel like they're being forced into these electric cars, which is the major problem, says Eric Tate. Interesting. Yeah, I mean, I think that's just inevitable, right? I think, you know, if you look at the projections, what a lot of these auto manufacturers want to do, I believe by 2030, they want about 90% of all vehicles, new vehicles being sold, to be EVs or electric vehicles. Hey, James Dixon is here. Welcome, James. Always good to see you, my friend. Hey, Luis Gonzalez is here. Says, hey, kiddo. Good to see you, Luis. Bagels and Walks is here. Welcome. Roy Denise, New York City, says, good evening, Tom. Mike Jones says, hello. Thank you for this information or informative live. Have you ever been homeless? I have not. Mike Jones is Doge to the moon. The LT Prod, good to see you. So I guess I'll turn it over to you guys. I want to ask a quick question. Within your organization, maybe you work, I don't know what industries you guys work in, but is cybersecurity a growing topic of conversation at your company? And if so, what is that sort of looking like? Because I remember at my last tech company, we actually used to have, it was a brand new thing that they actually implemented, is cybersecurity training the employees not to click on links, how to identify these particular cybersecurity attacks and threats, and how to best deal with them. And companies are spending a lot of money on this. So I think one of the new emerging trends that we are going to start seeing in the cybersecurity space are cybersecurity products and services that are totally 100% operated by artificial intelligence. So what do I mean by that? Artificial intelligence, I think, is going to be massive in the cybersecurity space because the AI is going to get so good, it's going to be able to identify automatically a malicious actor in the company's organization. Or in your infrastructure. So it'll be able to find very, very small pieces of code that could be deemed malicious and automatically alert somebody within the organization. So I think artificial intelligence is going to take a lot of the work off of the end user employee and give it to the computers. It'll be able to get so good that it'll be able to identify a typical maybe malicious piece of code or a piece of software or malicious email, and it'll be able to identify that before somebody even clicks on it. Warwalker says 3 times clicking a phishing email and you're out of a job. Nako says, Tom, cybersecurity is a big issue for our organization. Updating policies and addressing issues as IT is so pervasive, says Nakos. Thank you for that. Dan Zhang says, hey Tom, what are the commissions or compensations usually like in tech sales when you close a big deal? We'll answer that. I'll answer that. I'm going to answer that in a minute. That's a good question. Deborah says, my company uses Defendify and we are anonymously tested regular on cybersecurity. So Deborah, that's a good point. So a lot of the times your company will send you like a fake phishing email to see what your behaviors are around it. That's interesting. I think they did that in my old company too. You're out of here, John. Arun Z says, Tom, I'm an ML engineer at a large American finance company that you've heard of. Cybersec comes up all the time in the data space. Love that. Ryan Royal says, working in pharmacy, we couldn't have handheld devices unattended near patient areas. Hey, DJ Vargas RJ says, wow, Miami, Florida, beautiful city. What's up, everybody in Florida? Good to see you. Thank you for joining tonight. QBiz says, this is why I'll be moving towards DevOps. I think something's wrong with my chat. Hold on, I may have to reset the thing here. Denise says, yes, it's just an email to not click the sketchy links. Hey, Minnesota Walking. This is a friend of mine had their company send those around the holidays with the phishing about holiday bonuses. No way a bunch of employees clicked it. Jeez. Yeah, I remember getting those too. Nako says cybersecurity issues will be even more concerned when quantum computers come into play. I agree with that. Line Sync says AI increases efficiency. Will human intelligence decrease because we won't need to think/do or reason? That's an actually interesting thing. I never even thought about that, but I don't know. I think in the cybersecurity space, you are going to see more companies coming out with AI-infused products. Okay, so the particular product will have an AI in it that'll be so smart, it will study the history of the code of all of these malicious softwares, right? So they can identify fragmentations or fragments of malicious code, and the AI will be able to do that, decipher it, and terminate the threat. I think there was a particular company based out of Tel Aviv that is doing this exact thing. I forget the name of it, but I will post it in the stream recap. So Dan Zhang, let's get back to your question about compensation in that particular tech sales or software sales space. So I'm going to be very, very general here, but I'll go through a quick breakdown of OTEs. So in the industry, the acronym OTE stands for on-target earnings. Again, on-target earnings. So if you're in sales at a major tech company or a telecommunications company, your compensation will probably have two components, potentially three. So let's review those now. Number one will be your basic salary. So this is, what your salary is going to be. You're going to get paid every 2 weeks or every month or however the structure is set up. And number two is you're going to have your commission component. And I will tell you from experience, if you are a regular account executive selling into small to medium-sized businesses, you're probably going to get a commission check every month. Reason for that is because as you're selling to small to medium-sized businesses, the sales cycle tends to be very, very short. So I would say anywhere from 1 month to about 6 months. Sometimes you could even have a one-call close with the customer. So you're probably going to get monthly quotas as well as monthly commissions. Now, as you progress in your career as a tech salesperson, software salesperson, you're going to head up to the enterprise space. And as an enterprise account executive, you're probably going to have quarterly quotas, right? So you're going to have 4 times a year you need to hit a number for Q1, Q2, Q3, and Q4, okay? And that means you'll probably get a commissionable event about 4 times a year. And the reason for this is because, if we even look back to Palo Alto's earnings, they closed the deal for $75 million. Okay, a company's not going to make a buying decision for $75 million in 2 months. Maybe a year. I've closed deals in the $1 million range to maybe $5 million range that took me 16 months to close. And the reason for that is because those tend to be very much larger deals, and the integration is oftentimes a little bit of a nightmare, but we'll get into that later. And you have to have buy-in from not only the IT department, but from corporate lawyers, from HR, and everything just sort of has to blend in together very nicely. So if you start at the very, very bottom of the totem pole in a sales organization, you will probably start off as something that's called a sales development representative, or SDR. I would try to skip that particular step entirely if it were me, but your basic salary is probably going to be $50,000 with maybe a $10,000 bonus at the end of the year. And those are usually entry-level positions out of college. If you go up to an account executive, your basic salary is probably going to be right around $75,000 to $100,000 a year, depending on years of experience. And your on-target earnings is probably going to be anywhere from 130 to 150. But obviously, with anything else in sales, let's say if you reach 100% of your quota, well, that means you're going to achieve 100% of your on-target earnings. But there's many, many salespeople that do 200% of quota. So you could be an account executive making just shy of $250,000 or about $250,000. If you are in the top, let's say, 5% of account executives at your company. That's very, very doable. It's very reasonable. So some years you may make $110,000, some years you may make $150,000. If you have a blowout year where you crush your quota 300%, you may make $250,000. As you move up to enterprise account executive, depending on the years of experience you have, basic salaries could go all the way up to like $250,000 if you are a seasoned enterprise sales professional with 15 to 20 years experience. But right around OTEs are normally in the 320 to 350 range. But there are enterprise tech salespeople that can, make up to, 7 figures. They're very few and far between, but they definitely do exist. Top performers, if you are an enterprise account executive, you should probably do right around 350, 400. If you are, doing 120% of your quota, you're really dedicated to your job, you should probably be in the 300 range, most likely. All right, everybody, this is the Riverwalk. We haven't been here in a long time. Check out how shallow the water is here. I don't think we've ever seen the tide this low here. Billy says, what's your favorite fiction book? I don't really usually read fiction. I don't know. I could give you like a fiction movie. But this is the Citibank building. But check out the brand new Aston Martin Tower, which is going to be completed relatively soon. Can't wait. It's going to look beautiful. But if you guys are enjoying tonight's live stream, feel free. Oh, beautiful dog here. Look at that. Feel free to leave a like on the video and subscribe to the channel if you are new, if you enjoy these conversations. Also, if you scan the QR code at the top right-hand corner of the screen, I do write a free investing newsletter where we talk about some of the things we talk about every night on the stream. Corporate earnings, the US equity market, emerging markets, real estate, fixed income, all of that. So if you want to be a part of it there, it's a good free way to support the stream and receive all of my thoughts on the market. So if you do scan the QR code, punch in your email, you'll get it. I'll send it to you. Ooh, somebody's asking me about auto loan defaults. So I actually want to turn that question and ask you guys. That was actually one of my action items here. I actually wrote that in my notes. I wanted to ask you guys specifically about that, mainly because I'm not too savvy. Well, I shouldn't say savvy, but I'm not a big car guy. I really don't follow the market. I know that obviously here's the thesis, right? And I think I did see that Barron's article. Essentially during the pandemic, just like with anything else, everybody was going crazy buying houses, buying cars. So what we're seeing right now is a potential scenario where you could have massive, let's just say defaults, which would lead to repossessions on vehicles, which would flood the market, which would bring down the prices of used vehicles. So does anybody remember during the pandemic, maybe a little bit after, well, I know the pandemic is technically still going on, but I think you guys sort of understand what I'm trying to say. After all the craziness sort of died down, a lot of people were buying things that they probably shouldn't have done. A lot of these used cars were actually selling for almost MSRP as if they were new cars. So a lot of people actually made money on their purchases of used cars, as weird as that may have sounded. But I think a lot of that frothiness is going to subside. And again, I think it was, I forget who in the chat asked the question about that, but yeah, I think it's very possible, right? I think it's very possible that if you have enough defaults on auto loans, you could have massive repossessions, which could bring down prices. But I've honestly haven't been following it as closely as I should have. Let's just say that. But what do you guys think it's an actual big concern or not? What do you think? Eric Tate says, plus there's still a major chip shortage with the automotive industry. Yeah, that too. So you know what? I may actually revise my statement. Could you guys imagine the views from these apartments here? Absolutely beautiful. So let me actually revise my statement a little bit, if I may. During the beginning of the stream, I said if I had to bet on two distinct sectors to outperform or generate a lot of alpha in our portfolios over the next 10 years, I would argue that it would probably be cybersecurity is number one and number two healthcare. I think I want to plug in semiconductors in there, if I may. Hey, Teresa Diaz, thank you so much for the $10 donation. You are way too kind. Thank you for your kindness. It says, hey Tom, Southern California here to go towards Walks on Wall Street park bench in Central Park. Hey, thank you, Teresa Diaz. Appreciate that. Yeah, so for anybody who doesn't know what we're talking about, last night I put out a video and we were all chatting away. I'm thinking about buying a park bench in Central Park and calling it the Walks on Wall Street bench with the theme that anybody from anywhere over the world could come and have a place to sit and study and work on themselves. So if you maybe want to get better at a particular skill, come to the Walks on Wall Street bench in Central Park, hammer out some work, do whatever you need to do. I think it'd be kind of cool. So stay tuned for that. We may buy a bench. Check out this boat coming by. But thank you so much for the donation. Much appreciated, Teresa. QBiz is Tom, that's the Epic Hotel. And yes, the views are awesome from the restaurant and the top floor. So QBiz, is it this particular building? This is the Epic Hotel right here? So I know this is the Epic Hotel or the Residences. I think there's like two in one, right? There's the hotel and there's a residential part where you could actually buy a condo maybe. Points Traveler says, Tom, what is your favorite building in Miami? My favorite building in Miami is the Freedom Tower. I think it represents a lot in this country and I love it. Love the Freedom Tower. Hey, Andy is here. Says, that's a great idea, Tom. Good to see you. Andy from South Korea. The LT Prods is, Tom, do you get the bench for a term or forever? So I believe how it works, and any New Yorkers feel free to jump in here and sort of clarify. I believe you can purchase a bench in Central Park and those proceeds go towards, maintaining the park, maintenance, things like that. So it's sort of like a way to donate to the Central Park Conservatory, I believe. But all it really means is you just get a little plaque on the bench and you could say whatever you want. I don't know, Central Park is one of my favorite places, so maybe I'll do that. Tuzar says, how much is a house in Miami? So I'll give you guys a quick story, okay? So last Saturday, there was an open house right on my block in Miami. And I actually looked it up on Zillow. The house is actually a very nice house. 3-bedroom, 2-bathroom house. And I noticed it just went under contract. And if you remember from the topics of conversation that we were talking about before, we were saying, okay, well, the housing market is definitely slowing down, no doubt about it. But I've noticed a lot of the homes that are on the market are still ridiculously overpriced, and they're like these 3-bedroom, 1-bathroom homes that need a ton of work, and people are asking like 500 grand. Now, that's not even a real price. I look at that and I totally just blow that off. I'm like, that's not even a real price. You're asking $500,000 for a 3-bedroom, 1-bathroom home. That's not even a real price. So a lot of those prices are coming down. You're probably going to see 20% haircuts across the board. But any real property that comes on the market still seems to be selling pretty quickly. Now, again, I do want to preface this by saying that is anecdotal data, right? It's one house, but it was a really nice house on my block. Had the open house on Saturday, went into contract today, which is Tuesday. So, housing market's pretty hot, still. But that particular house, I think, went under contract for, I think, $530,000. And that was 3-bedroom, 2-bathroom, I believe. Maybe it was 4 bedrooms, I forget. I think 3 bedrooms, 2 bathrooms. But everybody, this is the Bank of America Tower here. I love to look at the palm trees here. Hey, Austin City Limits has hit the like button. Thank you, Austin. Wendy's is same here in Vancouver, Tom. Yeah, so it seems like the houses that are having very severe price cuts are the homes that are not of quality. Again, this is just from what I'm seeing in my particular market. I totally appreciate and understand that could be totally different in your particular market. I think you guys know my particular take on the housing market. I think it's going to slow down. I think the days of bidding wars for single family homes, people, offering $100,000 over asking, I think that's gone. I think long gone are those days, in my view. Hey, Roy S. is here. What's up? Good to see you, Roy. Roy is our pal from San Francisco, California. Mike C. says, having lived in Orange County, California, $500,000 doesn't seem outrageous to me, even though I know it really is. So that's so funny that you say that. I think from being from New York, I suffer from that same exact thing. Anytime you see a relatively decent property for, $500,000 or under, you're like, oh my gosh, what a great deal. But when in actuality, it's still ridiculously expensive. Dan Zhang says, Tom, when are you coming back to New York? So I may be coming back to Rhode Island. I am speaking at a healthcare event, a home healthcare conference. So I think I'm going to be there maybe for a couple of days, but I'm not sure the exact day I'm going to be back in New York, full honesty. Hey, 61 says, hello, Tom. Happy Tuesday. Enjoying your late night walk like always. Thank you, 61. I appreciate your kind words and thank you for being with us. What's next is FOMO is over. I agree. And and again, I guess I'll just briefly touch on my opinion in the housing market. I don't think it's going to be a crash. I just think you're going to have normalization in prices. That's really what I think. I think you're just going to see normalcy return to the market. If you look back before all of this COVID nonsense, it took about 60 or 90 to 180 days to sell a house. So I think if people are getting frustrated with 14 days on the market, I think you need to be a little bit more realistic. That's all. Yeah, what's next is I think 50-year mortgages are going to be in our future. Yeah, that's another product for Wall Street to sell us, I guess. So check out the beautiful Miami Tower from this angle. Hey, Willie says, as interest rates rise, people will go back to ARMs. I think that is a horrible, horrible decision. If anybody's watching this, please do not do that. But Willie, I think you may be unfortunately right, but an adjustable rate mortgage is probably one of the best ways to lose your house. Let's just say that. Hey, QBiz says, hey Tom, there's another luxury high-rise about to be built across the street from you right now. Ooh, so right here, QBiz. So Action Kid, one of my good friends that also lives down here, sent me an article that Mary Brickell Village was just recently sold for, I think, about $250 million, and they're going to be building mega high-rises there. Did anybody see that article on The Real Miami? Now, at first glance, when we walk around Mary Brickell Village, I'm like, this place is already built up. It's already developed. But I guess somebody bought it and they're going to be building a crazy, crazy high-rise. Billy says, Tom, agents are very shady right now. Deals are out there, but many people are overpricing. Had an agent try to pitch me a rehab for $100,000 when they bought it in the same condition 3 years ago for $35K. My God. Yeah, that's not cool. Yeah, that's obviously not cool. So this is a nice view too. On the left-hand side, you'll see the Wells Fargo building. And then as always, one of my favorite buildings here, the Aston Martin buildings here, right? Hey, NBA Elias is here. Says, hello, Tom. Hope you had a good day. I did, NBA Elias. We were talking about Palo Alto's earnings today. Yesterday, they actually absolutely blew it out of the water, beating on both the top and the bottom line, and also raising forward guidance. So we'll talk about why I look for that, right? So anytime I'm looking for an investment are looking to build an investment thesis, one of the many criteria that is an added plus that I like to look for are companies that are consistently beating their earnings expectations. So beating on both the top and the bottom line, but then having management give forward guidance that also beats analyst consensus. That is called a beat and raise quarter. And that's exactly what Palo Alto Networks reported yesterday. So they had a 49% rise in profit on a per share basis that comes out to $2.39 a share. Revenue rose 27% to about $1.6 billion. If we think about Q4 2021, so the same quarter last year, they posted about $1.2 billion. And the board of directors did approve a 3-for-1 stock split. Obviously, we know that doesn't change any of the underlying fundamentals of the business, but I think it's notable to put that out there, right? So it doesn't change the market cap, it doesn't change any of the fundamentals of the business, but they are doing a 3-for-1 stock split. Deal flow in the enterprise space, which we just talked about, was extremely strong. Extremely strong. Palo Alto Networks now has 1,290 millionaire customers, which means customers spending $1 million or more in ARR, or annually recurring revenue, and that's up from about 986 millionaire customers last year. Now, if we think about globally, their global reach, out of the global 2,000 customers who have purchased products in all three of Palo Alto Networks platforms, it's now 50%. That's up from 43% in Q4 2021 and 35% in Q4 of 2020. So we won't go into the intricacies of the Palo Alto offerings, right? I think SASE is probably has the most potential. Maybe we'll do an entire stream about what SASE actually really is. But Palo Alto has 3 main products that they sell. So out of their major global 2,000 customers, 50% of those customers are purchasing all 3 of their particular products, right? So this is exactly what you want to see. This is proof of concept that the particular products or services a company offers are working, they're very sticky to the business, and they're doing a very good job at not only landing customers, but expanding those customers, right? So we talk about land and expand. So the account executives land the customers, the account managers sell into those existing customers and expand the base. So that is doing absolutely fantastic. If we think about what Palo Alto's business model or revenues were before, the majority of their business actually didn't come from subscription services, right? Palo Alto Networks was a big hardware business. They still have a lot of the revenue coming from hardware, but if we look at subscriptions and support mix, it is growing at about 82%, it makes up about 82% of overall billings. So the reason why this is very good, especially for Wall Street, is Wall Street loves very predictable revenue models, okay? So if the majority of your sales is a one-time sale, so let's say, for example, you walk into Walmart, you buy an Apple, or you buy a piece of office furniture, that's a one-time sale, right? So Wall Street doesn't see that as very predictable. But if you have about 82% of your overall billings being subscription and support services, which means every single month, every single year it rings the cash register like clockwork, those are extremely predictable revenue streams that Wall Street loves. Because once you hit profitability, those earnings almost compound at an exponential rate. So if we think about the job, or is Palo Alto Networks doing a good job of growing subscription revenue? Well, it makes up about 82% of overall billings today. A year ago, it was about 79%, and in 2020, it was about 75%. So the predictability in the revenue model of Palo Alto Networks is phenomenal. And that is as many customers migrate to the cloud. We talk about this all the time. Cloud migration, I think, is still in the early innings. I think more customers are going to develop a cloud or a hybrid cloud strategy. And I think one of the main drivers for that, especially now, is remote work is here to stay, right? So you're going to need a way to manage, organize, and operate your workforce that's decentralized. So I think cloud adoption is only going to go one way, and that is up. Hey, Ryan Royal says, hence the rise of subscription and pro memberships for apps, 100%. 100%. You are right. Hey, David Pershing is here. Good to see you. Welcome. Hey, Ed Cooper says, I appreciate you and finding your channel. Thank you, appreciate it. And once again, everybody, if you want to actually have a reference of a lot of the data that we're talking about tonight in relation to Palo Alto Networks earnings, all you have to do is type !cyber in the chat, and I actually programmed the Nightbot to drop the link to the investor deck, okay? Last thing I want to talk about tonight, everybody. Here was something very interesting that the CEO of Palo Alto said on the call. Nikesh Arora, CEO of Palo Alto Networks, he was talking about the labor market, and listen to how strange this is. And I want to know you guys' take, because I thought this was rather strange. He said in late 2020, early 2021, they saw an uptick of existing employees leaving for startups, or to work at a startup, to do their own thing, to try to create their own companies, or to go to a competitor, okay? So that was the statement. So they said they saw a massive, massive uptick in late 2020, early 2021, of their employees leaving Palo Alto Networks to either go work at a startup, to start their own business, or to work at a competitor. But you know what he's saying now? So the CEO of Palo Alto came on the earnings call and said about 25% of those people who left, quit the job, were actually rehiring those people back. And he's like, we actually have a massive, massive pipeline of employees that used to work for us, that were really good talent, that quit to do something else. We want to hire them back. Now, I think that the CEO has no choice, right? Because if you also remember all the way back to what we were talking about at the beginning of the stream, I also mentioned, and this is on the investor deck if you guys want to read it for yourself, they said that there is a critical shortage of cybersecurity talent in the United States and abroad in order to hire from. So usually if you tell your boss to go kick rocks and you quit, probably not going to hire you back. Right? Probably not going to hire you back. But in the context of, look, labor force participation rate is dropping off of a cliff, and it's probably even lower when you factor in skilled labor in cybersecurity. So the reason why I bring this up is I think this is going to be a very good opportunity, maybe for you guys in the chat, maybe even myself, to get those very, very lucrative jobs, because they're very, very in demand. And you don't necessarily need to have a PhD or even a college degree to get these very lucrative jobs. Ed Dunkel says less venture capital right now. Yes, that is correct. A lot less VC money sloshing around there. Hey, Hermes Addict, good to see you. Welcome. Yeah, QBiz has never burned bridges. I agree with that. Wendy England's Airbus plans to hire 6,000 new employees. Wow. Yeah, 61 says you definitely always want to leave in good terms, especially God forbid things don't work out. I agree. This is one of my favorite views here in Brickell, Mary Brickell Village. Hey, Irma's Addicts says, hey Tom, great stream as usual. Thank you so much. Somebody says, do I have an IG? I do, but I'm mainly on Twitter. So if you want to connect with me off the stream, just follow me on Twitter at Walks Wall Street, or just sign up for the free newsletter, because I'm very seldom on IG. I mainly use Twitter. Hey, Roy S is here. Good to see you. Dusty Cole, Cindy Foley, Lemonade, welcome. Line Sinks is in when the cloud elements thereof get cyber attacked by bad actors, all manner of day-to-day life will scream to a halt. On-site storage will have a permanent place. Yeah, I think you're right, Line Sync. You'll probably always have demand for something called like a hybrid infrastructure. And I think that's one of the reasons why healthcare in particular was so slow to transition to the cloud. Yeah, MBA Elias don't walk the plank when leaving a company, especially the clubby tech world. Dude, I couldn't have put that any better myself, my friend. Couldn't have put it any better myself. So I think it's safe to say that Palo Alto Networks is the leader, right? And I'm not just saying that because they reported earnings. Look at where Zscaler is trading in terms of a relative strength basis. You could look where CrowdStrike is trading on a relative strength basis. Okta, Ping Identity. Actually, Ping Identity was just recently acquired by Orlando Bravo's private equity firm, Thoma Bravo. I think we actually talked about that, or may have talked about that acquisition on another stream. But Thoma Bravo took private Ping Identity, which is a cybersecurity company that specializes in the identity and access management space, or IAM cybersecurity. And their main competitor is actually Okta, under the ticker symbol OKTA. What do you guys think about this Lucid Motors vehicle right here? What do you guys think? Tesla or Lucid? What would you say? Hey, Miss Brown Eyes, good to see you. Western Mass Dave says, Tom, Twitter has been having some cybersecurity issues as well. I think also, Dave, now that you mentioned that, I think Twilio actually was just recently undergoing a massive cybersecurity event. Hey, Ed Cooper says Lucid all the way. Unlimited stimulus to cybersecurity will be big business for Tesla and AI. Jimmy is here, says Team Tesla. I think I'm on Team Tesla as well. I just think this car looks a little bit too big. Line Sync says, what is the price of that vehicle? I don't know, probably $100,000. And that's a total guess out of left field, by the way. That's literally a total guess out of left field. Hey Kim, what's up? Good to see you. Eric Tates is in the infrastructure bill just to get everything the way it's supposed to be. Is going to cost a fortune, yeah. Somebody says tell the 5 cheapest universities in America. I think they would be all the state schools and the city schools, right? I think if you want to go to like a top 50, those are probably going to be the most expensive, but I think I went to one of the most affordable colleges in the United States. Ed Cooper says, hey Tom, it looks like downtown Brooklyn. I definitely like the rainbow walls here. I think this is one of my favorite things about Brickell. It's actually a very, very quiet night. Well, I guess it's because it's a Tuesday, and it's, what time is it, everybody? If we could do a quick time check in the chat. It's probably, hey, it's probably about, what, 10:30? Best Bets TV says, Tom, will you ever buy an EV? Yes. The answer is yes, but probably not until I'm in my 30s. I think by the time I'm maybe 30, 31, I would say maybe 35, the range on an EV, especially on a Tesla, is probably going to be triple what it is today. So, I don't know. I think I'm still young enough where I could just ruck it out on the bus. I only take the bus. I have very, very little possessions. I take the bus, take the train, gets me to where I need to go. Action Kid, we were just talking about you, dude. Says, Tom, can't believe Mary Brickell Village got sold. RPT Realty from New York acquired them for $216 million. Yeah, so AK, you sent me that today, and we were talking about that article a little bit on the stream. So what are they gonna do? Because, I mean, look at this place. This place pretty much looks to be fully developed, right? So I'm assuming Mary Brickell Village is this little section here, right? Ed Cooper says it's going to be downtown Brooklyn in maybe 10 years. I think it's possible. I mean, I remember when downtown Brooklyn wasn't even downtown Brooklyn. And I think many of you understand what I mean by that. I remember walking to Fort Greene from Atlantic Terminal, Brooklyn, all the way to the Brooklyn Navy Yard back in 2011, 2012. And it looks completely different than it did. By quite a large margin, too. Action Kids says they said up to 80 stories can be built in Mary Brickell Village. So Action Kid, correct me if I'm wrong. So they're talking about all of this, correct? So anything here and across the street, like where the FedEx store is, this is considered the Mary Brickell Village area. I mean, if they build ultra tall skyscrapers here, this place is going to look insane. So this is Mary Brickell Village here. Lemonade says, I'm still in awe of this city, not the city 20 years ago, not even 15 years ago. Yeah, that's what a lot of people have been saying. I mean, look at all this. A lot of really nice buildings. So Action Kid, I want your expertise here. I want your opinion. Obviously, tonight's stream, we were talking about Palo Alto Networks. I personally think it is the leader in cybersecurity. They had a massive beat and raise quarter. What do you think about the overall trajectory of IT spending as it relates to cybersecurity? Do you think that cybersecurity is going to continue to have secular tailwinds? Do you think that it's probably going to be a sector within the S&P that is going to outperform? Sort of, what are your overall thoughts about it? You know, this skyscraper to the right, it looks like it's going to be residential units. QBiz says, Tom, this was an absolute ghost town during the Miami Vice days. Sophie says, how could I talk to you, bro? In the chat. We could talk right here. G Shep says, Miami reminds me of a Chinese city, only smaller. Action Kid says, I think it will be a sector to outperform. Seems like it's needed in this day and age. I agree. You know, I said at the beginning of the stream, if I had to pick two sectors, if somebody says you had to over-concentrate in two sectors over the next 10 years, I would put all my money in cybersecurity and healthcare, but then I sort of walked back my statement It would have to be between, cybersecurity is definitely in there. Number 2 would probably be semiconductors or the chip sector overall. And this is mainly due to the massive subsidy and investment from the federal government to bring chip manufacturing back to the United States. And a lot of that process is going to be automated away, right? So that's only going to increase operating margins, increase gross margins. Speaking of federal governments, last thing that I would like to say about Palo Alto Networks earnings report. Nikesh Arora, obviously the CEO, he came on the report and said that they are raising forward guidance for the full fiscal year next year. And he said a lot of that increased revenue is actually going to come from the SLED or public sector space. So as you do deals in the public sector, if anybody's ever sold into SLED, which is an acronym for selling into state, local government, and education, those sales cycles take an extremely long time, and it's all about relationship building. And if we think about what we said at the beginning of the stream, how I think that cybersecurity falls into a third industry segment called a requirement. So I think you have must-have products, a nice-to-have, and then cybersecurity is a requirement. As we think about what's been going on with a lot of these Russian hacks and attacks and cybersecurity criminal groups coming out of Russia and China, those particular governments, state and local governments, are going to need to up their spending on critical infrastructure. So that's going to be an additional tailwind for Palo Alto Networks. So I just wanted to make you guys aware that that was also said on the earnings report. Oh, QBiz, is that what this is? I thought this was a hotel. So QBiz's Sexy Fish is a restaurant, lounge, cigar bar. I thought it was a hotel. You may be right. Hey, Autumn Beauty says, did the chip manufacturing license their products to companies? Well, we're seeing a big shift towards companies wanting to develop their own particular chips. So there is a company out there that is, you know what, we'll talk about that on the next stream. There's a company out there that is actually helping other companies that want to build their own proprietary chipsets. And I'm very bullish on that particular company, but we'll save that for another stream since we're almost going to end here. But yes, very good. Jace is 40 years or so. Salt air will put those skyscrapers in bad shape. Well, I guess you could say that about any city really in the world, right? New York is surrounded by saltwater air. San Francisco is surrounded by saltwater air. Hey, Q50 says, hey Tom, I'm from Jamaica. How do I obtain a work permit sponsorship so I can work at Amazon? I have no idea. To be totally honest and blunt, I do not know, man. I'm probably the worst person to ask about that stuff. I have very little knowledge or expertise in immigration, anything like that. I think it should be a lot easier for people to obtain visas to work here. I just know that it's a nightmare. It's the only thing I know. So AK, if you're still watching, have you ever been to this particular ramen place? It looks really good, but I've never been. I may have to stop by here on my lunch break tomorrow. But Q50, I hope you get a work visa here, my friend. I think the United States should make it a lot easier for people to come here and work. But some of my friends are trying to go through that exact same process, and let's just say it is, it's not easy. It's definitely not easy. So what I think I may do, everybody, on our next newsletter, I may write a segment on the best practices to break into tech sales, cybersecurity, how to acquire one of those jobs. So please check us out there. But my phone looks to be about putting out a battery here, everybody. So I do want to thank everybody for joining tonight's live stream. Hopefully you found it very informative and insightful. I appreciate a lot of the feedback and the conversation that we had today in relation to cybersecurity and Palo Alto Networks earnings. So if you guys like the conversation, if you scan the QR code on your screen, it'll bring you to my free investing newsletter where we talk about many things, not only the US equity markets, but emerging markets, fixed income, and the housing market. So please stay in touch there. We will be live tomorrow at 8:30 p.m. Eastern time if you want to come join us again on the stream. But thank you for joining, everybody. I wish you a very, very happy, healthy, safe, and prosperous rest of your week. Make it a great middle of the week as we head towards Wednesday. So James, I appreciate it. Lion Sync, Ryan Royal, thank you. Autumn Beauty, Andy, Deborah, QBiz, Western Mass, Dave, I appreciate it. Joan, Mohammed, Brian, British Gray, Willie, G. Shep, thank you. Austin City Limits, Sweet Country Living, the LT Prod, Dan Zhang, thank you so much for joining, my friend. We'll connect when I'm back in New York. Action Kid, thank you so much, and please check out our friend Action Kid. Bruce Wayne, Destructionist. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Subscribe to the channel, like the video, and I'll see everybody right back here tomorrow. Thanks so much, everyone, and we are done for tonight. Thanks for coming out.